Are you ready to uncover the secrets of tax filing and take control of your financial destiny? Get ready, because today we're embarking on a journey into the world of taxes, an area often left uncharted by our traditional education system. Welcome back to the School Failed Us channel, where I aim to bridge the gap between school and the real world. I firmly believe that knowledge is power and that it's high time we take charge of our financial well-being. Today, we're diving headfirst into the intriguing realm of tax filing. If your experiences are similar to mine, I had no idea how to file my own taxes after receiving a bachelor's and master's degree. This topic wasn't even discussed at all. While we learn many valuable subjects in school, understanding how to navigate the complex landscape of taxes is absent from the curriculum. It's no wonder that many find themselves overwhelmed and uncertain when it comes to filing their taxes and pay astronomical amounts to have someone do this for us. It's really important to understand the tax filing process to avoid costly mistakes, prevent missed opportunities, and ultimately maximize your returns. This video will be broken into two parts. We'll begin here by unraveling the fundamental concepts of taxes, shedding light on the often confusing jargon that accompanies them. We'll cover how to choose the right filing status and dig into income and deductions. The second video will cover various tax forms that you need to be aware of, filing options and deadlines, along with tips to ensure a smooth filing experience. Let's dive in. So, what are taxes anyway? Taxes are mandatory financial contributions that individuals and businesses are required to pay to the government. These contributions play a vital role in funding essential public services such as infrastructure development, healthcare, education, and more. Think of taxes as the lifeblood of a functioning society, fueling the resources necessary to keep our communities running smoothly. The tax landscape is diverse, but here are some common types you should be aware of. Income tax. This is the tax levied on the income individuals earn through various sources, such as wages, salaries, and investments. It's typically calculated based on a progressive tax system, where the tax rate increases as income rises. Sales tax. Sales tax is a percentage added to the purchase price of goods and services. It's typically collected at the point of sale and varies by jurisdiction. Keep in mind that sales tax rates can differ between states and even within different localities. Property tax. Property tax is a tax on the value of real estate properties, including land and buildings. It's usually assessed by local governments and used to fund local services like schools, roads, and public safety. Excise tax. Excise taxes are applied to specific goods and services, such as gasoline, alcohol, tobacco, and luxury items. These taxes are often implemented to discourage the consumption of certain products or to fund specific programs. These are just a few examples, and the tax landscape can be much more complex depending on your specific circumstances and jurisdiction. As we delve deeper into the world of taxes, it's important to familiarize ourselves with key terms and concepts. Here are a few essential ones to keep in mind. Deductions. Deductions are expenses that you can subtract from your taxable income, reducing the overall amount of income subject to taxation. Common deductions include mortgage interest, student loan interest, and medical expenses. Credits. Tax credits, on the other hand, are directly applied to your tax liability, reducing the amount of tax you owe dollar for dollar. Examples include the child tax credit, earned income tax credit, and education credits. W-2 and 1099 forms. The W-2 form is issued by employers to employees and reports the wages earned and taxes withheld throughout the year. On the other hand, the 1099 form is provided to independent contractors and freelancers, detailing the income received from clients or businesses. Understanding these terms and concepts will be crucial as we progress in our tax filing journey. So make sure to familiarize yourself with them to navigate the tax landscape with confidence. Before you can start filing your taxes, it's essential to gather all the necessary documents. This ensures that you have accurate information at your fingertips and can claim all eligible deductions and credits. Some common documents you'll need include W-2 forms. If you're an employee, your employer will provide you with a W-2 form that reports your wages, tips, and withheld taxes. 1099 forms. Independent contractors and freelancers receive 1099 forms, which detail the income earned from clients or businesses. Receipts and invoices. Keep track of receipts and invoices for business expenses, medical expenses, and other eligible deductions. Bank and investment statements. Collect statements from your bank accounts, investment accounts, and retirement plans to report any interest, dividends, or capital gains. Remember, this is just a starting point, and depending on your circumstances, you may have additional documents to gather. Take the time to review the IRS guidelines or consult with a tax professional to ensure you have all the necessary paperwork in order. Now that you've gathered your documents, it's time to set up a filing system that keeps everything organized and easily accessible. Here are a few tips to help you establish a foolproof filing system. Categorize and label. Create categories for different types of documents, such as income statements, expense receipts, and tax forms. Label folders or envelopes accordingly to keep everything neatly organized. Digital or physical. Decide whether you prefer a physical filing system, using folders or binders, or a digital system, using cloud storage or dedicated tax organization software. Choose the method that suits your preferences and ensures easy retrieval of documents. Timestamp and sort. As you receive new documents throughout the year, be diligent about time-stamping and sorting them into the appropriate categories. This will save you time and frustration when tax season rolls around. Backup and security. If you opt for a digital filing system, make sure to back up your files regularly and implement proper security measures to protect sensitive information. Consider using password protection and encryption for added peace of mind. By implementing an efficient filing system, you'll have all your tax-related documents neatly organized, making the process of filing your taxes a breeze. Your filing status determines how you'll be taxed and can significantly impact your tax liability. There are several filing statuses you can choose from. Let's go over the most common ones. Single. If you're unmarried, divorced, legally separated, or widowed, and don't qualify for any other filing status, you can file as single. Married filing jointly. This status is available to married couples who choose to file their taxes together. It often provides the most advantageous tax benefits. Married filing separately. If you're married but prefer to file your taxes separately from your spouse, you can choose this status. Keep in mind that there may be certain limitations and potential loss of tax benefits. Head of household. This status is available to unmarried individuals who have dependents and cover more than half the cost of maintaining their home. It often offers more favorable tax rates and deductions. Qualifying widow with dependent child. If your spouse passed away in the previous tax year, and you have a dependent child, you may qualify for this filing status for up to 2 years following your spouse's death. Determining the right filing status for your situation is crucial. To help you make the right choice, consider the following factors. Marital status. Are you single, married, divorced, or widowed? Your marital status will narrow down the available filing options. Dependents. Do you have dependents? If so, you may be eligible for certain filing statuses like head of household or qualifying widow with dependent child. Financial implications. Assess the financial implications of each filing status. Compare the potential tax rates, deductions, and credits associated with each option to determine the most advantageous one for your circumstances. Next, you really need to understand the implications and benefits of each. Single. Filing as single may result in higher tax rates, but it allows for independence and simplicity, particularly if you don't have dependents. Married filing jointly. This status often offers lower tax rates, access to various deductions and credits, and the ability to combine income and share expenses. Married filing separately. While there may be specific circumstances where filing separately makes sense, it's important to weigh the potential loss of tax benefits and the limitations that come with this status. Head of household. This status generally provides more favorable tax rates compared to single status, along with access to deductions and credits designed to support households with dependents. Qualifying widow with dependent child. This status allows you to maintain some of the benefits of filing jointly for up to 2 years following your spouse's death, providing a smoother transition during a difficult time. I just wanted to take a quick time out to see if you're still with me. We're over halfway through this first video. I know this isn't the most exciting topic in the world, but one that is necessary to understand. You know the old saying that nothing in this world is certain, except for death and taxes. I'll admit this can be dull at times, but we need to understand this process in order to maximize our returns. Understanding the different types of income, identifying deductions and credits, and knowing how to maximize deductions can make a significant impact on your tax liability. When it comes to income, it's important to recognize the different types that may be subject to taxation. Here are a few common ones. Earned income. This includes wages, salaries, tips, commissions, and self-employment income. It's the income you receive as compensation for work or services you provide. Investment income. This encompasses dividends, interest, capital gains, and rental income derived from investments such as stocks, bonds, mutual funds, real estate, and more. Retirement income. If you receive income from retirement accounts like pensions, 401k, individual retirement accounts, IRA, or Social Security, it's considered retirement income. Miscellaneous income. This category covers income from sources such as freelance work, gig economy jobs, alimony, royalties, and gambling winnings. It's essential to report all income, even if it's not from traditional employment. Now that we've covered the basics of income, let's shift our focus to deductions and credits. Deductions and credits can help reduce your taxable income and potentially lower your tax liability. Here's how they differ. Deductions. Deductions are expenses that you can subtract from your taxable income. Common deductions include mortgage interest, student loan interest, medical expenses, state and local taxes paid, and certain business expenses. It's crucial to keep records and receipts to substantiate your deductions. Credits. Tax credits provide a dollar-for-dollar reduction in your tax liability. They directly offset the amount of tax you owe. Examples of tax credits include the child tax credit, earned income tax credit, education credits, and residential energy credits. Credits can be more valuable than deductions, as they directly reduce your tax bill. Now that you understand the basics of income and deductions, here are a few tips to help you maximize your deductions. Stay organized. Keep track of your expenses and maintain detailed records. This will make it easier to identify eligible deductions when it's time to file your taxes. Be aware of changes in tax laws. Tax laws and regulations can change from year to year. Stay informed about any updates or changes that may impact the deductions you can claim. Consult a tax professional. Tax laws can be complex, and navigating deductions requires careful consideration. Consider seeking advice from a tax professional who can provide personalized guidance based on your specific situation. Research eligible deductions. Take the time to research and understand the deductions that apply to your circumstances. This will ensure you don't miss out on any potential tax savings. Remember, while it's important to maximize deductions, always ensure you're accurately reporting your income and claiming deductions and credits within the guidelines set by the IRS. Honesty and compliance are key. Thank you for watching. Please watch part 2 of this video series, which has also been posted on this channel. This is a complex subject that we were never taught before, so there is a lot of valuable information to cover. Please be sure to like this video and subscribe to this channel for updates on future videos. I also welcome recommendations of other topics you'd like to see covered on this channel. Please provide in the comment sections below.